Hey traders, Jason here from ALAB Brothers. So in this video, I'm going to talk about identifying tops with technical indicators. Okay, right now the market is doing fine. Okay, it dipped beginning of November, bounced back when the word of the government shutdown ending started to circulate. So the Dow's at an all-time high, Nasdaq and S&P not that far from all-time highs, but there have been a lot of individual stocks that have taken huge hits, just huge, down 20, 30, 40, 50%. Some big losses out there. So I want to talk about how to identify some tops with technical indicators. And the reason is because even though we look at the indexes, you trade individual stocks, so you have to make all decisions with the charts of individual stocks. Okay, you can never, ever say, well, the Dow's at an all-time high, therefore I'm going to hold this stock. No, if the stock chart is not in good shape, then you have to make a decision from the stock chart. Okay, not from the indexes. The indexes are kind of like a green light, red light system, kind of gives you the backdrop, but all decisions have to be made with individual stocks. So I'm going to go through some stuff here on how you could identify tops, and you can actually flip everything upside down, and because all this stuff works in the opposite direction too. All right, so let's go through a handful of examples of stocks that have taken some hits recently and some indicators that you could have used to identify the tops. All right, starting off, here is ALAB. For the first couple charts, I'll talk through how I evaluate things, and then after that, you'll kind of get the hang of it, and you'll kind of know how I operate. Okay, so stock went up. You can see here, flag sideways to the 21. The orange line is the 21. Then it moved up again. We had a hard move down here, and then a bounce, and then a hard move down there. So what I want to focus on is this hard move down, the bounce, and then the hard move down, because that's essentially the top. Okay, there was a top here. In hindsight, it was a top, but could you have known in the heat of the moment? So on this hard move down, you had RSI broke down here, MACD crossed down there, stochastic crossed down there. So all three are heading south, which is fine. Okay, strong stock, it's allowed to pull back within an uptrend. Then you get a bounce attempt, but during the bounce attempt, the RSI doesn't climb very high. It just simply flags sideways, okay? And notice the MACD can't even cross back up. It just goes up and kisses and then falls off again. The stochastic cycles up and then rotates down, okay? So this is a bounce attempt, and you're wondering, is this, if this is a pullback within an uptrend, then this should be a resumption of the uptrend. Okay, so you're wondering, is this a pullback within an uptrend, or is this the first leg down of a downtrend? The indicators tell us that a top is in and a downtrend is going to be underway, or at least there's going to be another leg of the downtrend, because the price attempted to move up, but the RSI said, nope, I'm not having it. MACD comes up and kisses and then falls off, and then the stochastic simply cycles up and then goes back down, and then we headed south. So when you see all this stuff line up, you know that this is the beginning of a mini downtrend, not a dip within an uptrend. All right, next. Here's APLD. All right, so stock obviously did really well, went from low, mid single digits all the way up to 40. Comes down fairly hard here, but normal stuff. I mean, stocks that do really well, they're allowed to fall. It's not anything out of the ordinary. During that fall, the RSI broke down, the MACD crossed down, stochastic was already trending down. Normal stuff, that's what you'd expect when a stock pulls back with an uptrend. Then there is a bounce attempt, but during the bounce attempt, the RSI simply flags sideways. Okay, if the stock was strong, the RSI would have rallied back up into oversold territory above 70, but it only flagged sideways. The MACD made no attempt whatsoever to cross back up, like nothing whatsoever, and the stochastic cycled up and then rotated down. Okay, so the way I look at it is the MACD is the trend or direction, and then the stochastic is a timing mechanism within the direction. Okay, so I'm going to get rid of that stuff, because if you're wondering, like you're starting to think like, all right, I think a top's in place, the stock's going to go down. Should I go short here? Should I go short here? Should I go short here? Where should I go short? Well, this is your trend. This is your timing mechanism within your trend. So you're going to go short approximately when this crosses back down. Okay, and if you do that, you're going to be pretty close. And of course, this is a daily chart. You can zoom in with like a 2-hour chart to get a little bit better entry if you want. But overall, APLD tried to bounce, but the fact that the indicators were rejecting the bounce is what is the valuable information that you can get from this. All right, CEG, volatile, but had done very well over the course of time. From here, we have a hard drop. During that hard drop, RSI breaks down, moves through a trend line. MACD crosses lower. Stochastic crosses lower. Normal stuff. Then there's a bounce attempt, a legit bounce attempt. It almost goes back to the high. But during that bounce attempt, the RSI simply pops and then flags. The MACD goes above, crosses back up for a single day, but then crosses back down. So that basically is a kiss there, and that's a cross there. Okay, so the combination of this thing bounced, but this went nowhere. This could not cross back up. This cycled up and then crossed back down. We got a kiss over here, a cross over there, and then it goes south again. So if you're wondering, like, is this bounce, here the resumption of the uptrend? The indicators were telling us no. IREN. All right, so stock moves up, had done really well, $10 all the way up to 70. Great move. Hard move down here, normal stuff during the hard move. This crosses down. MACD crosses lower. Stochastic was already moving lower. Then there's a really good rally. There's some volatility in there. These candles are like 5 to 10 points in size every single day. But big rally goes back to the high. So what happens? The RSI it trends up a little bit, but it mostly just flags up underneath overbought territory. The MACD moved up. It crossed up for 2 days, but then immediately crossed back down. The stochastic cycled up and then cycled back down. So the combination of this flagging and then breaking down, this kissing here, this crossing here, told us to completely reject this move. There was an attempt to move higher, but the move was being rejected. And the stock eventually went lower, as you can see. All right, next. Here's Nebus. All right, so stock has done great. It's volatile. There are gaps there, but overall it has done extremely well. Hard move down, recovery. The question is this recovery the next leg of a move up, or is it just a bounce within a downtrend that is just starting? All right, so during this hard move down, RSI falls out of a topping pattern. MACD crosses. You can see negative divergence there. The MACD crosses. We got some negative divergences, and then stochastic crosses. Normal stuff. A stock is allowed to do those types of things. Then we have a legit bounce that almost goes back to the high. And the question is that, should we embrace that or should we reject that? Well, the RSI moved up and then just like flagged here. The MACD moved up and kissed, and the stochastic moved up and then cycled down. And then I should say rolled over. So we got a move up over here, but the indicators were rejecting the move. All three indicators were telling us, well, not the stochastic doesn't tell us. The stochastic is a timing mechanism. But the RSI and the MACD were telling us, like, don't trust that move up, okay? It's a nice move up. The points are great, but don't entirely trust it. You can trade it, but keep a stop really tight because it's not being embraced by the market. And sure enough, we got a kiss here, cross here. This breaks down, and obviously you can see what happened. The stock has moved down since then. All right, next up, RGTI. All right, so we got a huge move up, we got a solid move down, and then the stock flags sideways. And the question is this like a little base building that's going to eventually resolve to the upside, or is that just a pause within a downtrend? So on the hard move down, you got this falls out of a topping pattern. You got that crosses and that crosses. While this is trying to bounce and build a base, RSI essentially flags. MACD makes no attempt to cross back up, and as a timing mechanism, there you go. Okay, so if you're looking at this thinking like, well, when do I go short? Or, if you go short, when do I do that? Should I go short here? Should I go short here? Should I go short? Like, where do I go short? This is the trend, MACD, and then this is the timing mechanism. So you can go short when the stochastic gets to a higher level and then it closes back down. Okay, so all three of these, you got this breaks down, this kisses over here, this crosses there. Everything tells us that this thing is going to go lower. Next up, Riot. All right, kind of a messy chart here. Candles definitely got really volatile here. Move up, move down, and then eventually a move up. So we're wondering, like, is this move up like a legit move up? We're going to do higher high. We're going to move like this, or is that just a bounce within a topping pattern? So on the first move down here, RSI crosses down, MACD histogram negative divergence, and then MACD crosses down, and the stochastic was already going down. Okay, then we get this bounce. So the question is this bounce being embraced or is it being rejected? So what happens here? Well, the RSI essentially flags sideways here. It cannot get back into overbought territory. MACD kisses, cannot cross back up. Stochastic cycles up and then crosses back down. So we got a really nice move up over here, but the indicators were telling us don't trust it. It's not going to stick and it's not going to go very much higher. And as you can see, pretty big move down. All right, last chart, UEC. Stock did well, trended up, single digits all the way up almost to 20. You got a hard move down here to the 50-day moving average. During that move down, we got a cross here, cross there, cross there. So normal stuff. Then we get a bounce. Okay. So the question is this like a bounce within an uptrend? I mean, like, is this move down, a pullback with an uptrend, and now we have a resumption of the uptrend? Or is this like just a bounce within a newly formed downtrend? So during the bounce, we get a little bit of a bounce here from the RSI, but it doesn't go too far. It certainly doesn't go into overbought territory. We got a kiss here. We got a cross here. The indicators were telling us we don't trust this move. It looks nice. We had a nice bounce from 13 up to 16. Anyone who held from over here is breathing a sigh of relief. But the indicators were telling us there's no momentum behind this. There's no energy behind this. The MACD over here couldn't even cross back up. And as a timing mechanism, when the stochastic cycled up and then rolled over, obviously that was a good exit if you were long. It's a good entry if you're going to go short. Okay, so to repeat what I said at the top, regardless of what the indicators are doing, or regardless of what the indexes are doing, you have to judge each individual stock on its own. Okay. And here, hopefully, with RSI, MACD, and stochastic, hopefully these indicators will help you tell the difference between a bounce that is a continuation of the uptrend, where the indicators will act a certain way, or whether the bounce is just a bounce within a newly formed downtrend, because it'll act a different way. Okay. And whatever the answer is, listen. Okay, listen. A lot of traders like to negotiate with the market and bargain with the market, and like they want one more move up or one more day or one more this, one more that. It's like, just clear your mind and just listen to what the market is trying to tell you, and just do what the market is trying to tell you. Don't be a know-it-all. Don't be stubborn. Just clear your mind and listen to what's being told to you, and then act on it. All right, we'll see you next time.